All right, diving right in today, we're going to unpack this Ameritas ApexAdvantage fixed indexed annuity. Got some great info here from Diversified Insurance Brokers.
A lot of moving parts with these things.
Exactly. So we want to break it down. What's important for people to know about how it works, especially for long-term planning, thinking about retirement income and all that.
Makes sense.
We'll look at how this thing can grow, the safety features, how it can eventually provide that income.
Sounds good. Let's do it.
Okay, so first off, what kind of annuity is this at its core?
So it's called a modified single premium deferred annuity.
Modified single premium.
Yeah. So you mostly fund it with a lump sum.
Okay,
But there's a little window in the beginning you can add some more.
gotcha.
But the big idea, right, it's aiming for that combo people want. Growth potential, principal safe, and flexibility when you need the income later on.
All right, so let's talk about that growth. I see it's linked to market indexes like the S&P 500. So your money's got a chance to grow with the market.
Yeah, exactly. You pick an index, and the annuity can earn interest based on how that index performs.
Okay, and then what about downsides? Because the market, it goes up, it goes down.
Right. So here's the key. There's a 0% floor.
0% floor.
Yeah. Huge in a volatile market. It means even if that index dips, you don't lose the interest you've already earned, based on the good times.
So you get the upside, but without the direct hit if things go bad.
You got it. Participate in gains, but without that risk of market losses eating into what you've earned.
Makes sense.
Now, if you're really conservative, they also have a fixed account option.
Oh, okay.
More predictable interest rate there.
All right, so you've got some choices. But besides that growth, what other guarantees come with this annuity?
So you've got a minimum guaranteed surrender value, 87.5% of your premium, minus withdrawals and charges, plus some guaranteed interest.
Okay.
That's your baseline protection.
Gotcha. So even if things go really south, there's still a good chunk you're guaranteed to get back.
Exactly. And on top of that, at the end of each term, with your index strategy, you can actually switch to a different one.
Oh, interesting.
So if your needs change or the market looks different,
yeah.
you've got that flexibility.
Nice. Now, what about if you need to access your money before full-on retirement?
So after that first year, you can withdraw up to 10% annually. No surrender charges.
Okay, 10% per year.
Right. Now, if you need more than that within the first 10 years, then those surrender charges would apply.
Okay, makes sense. And it's also, I saw something about a market value adjustment.
Oh, yeah, the MBA.
What's that all about?
Think of it as, it kicks in if interest rates have moved a lot since you bought the annuity.
Okay.
If rates went up, your withdrawal value might be a little lower.
Huh.
But if they're fallen, it could go up. It's how the insurance company kind of manages their interest rate risk.
All right, so there's access, but it's really meant for the long haul. I did notice, though, there are some specific cases where you can get your money out without penalty.
Yeah, that's a good point. So they've got these waivers down in, can be really important.
Okay.
If you end up in a nursing home, get a terminal illness diagnosis, or need that qualified home health care,
Right.
you can access funds, penalty-free, adds that extra security for, the unexpected health stuff.
Right, peace of mind there. So eventually we get to retirement and we want this thing to start paying us. What are the options for that?
So one way is annuitization.
Annuitization.
Basically, you convert your savings into guaranteed income for life.
Okay,
Could be a fixed amount or it could increase over time.
gotcha.
Then they've got these optional riders, the GLWBs, guaranteed lifetime withdrawal benefit.
Right, the FutureNow riders. What's the deal with those?
All right, so the basic FutureNow rider, it's 1.25% annually.
Okay.
You get guaranteed income for life. Could be level or it could potentially grow. Then there's the FutureNow rider with booster. This one's 1.35% per year.
A little pricier.
But here's the kicker. If you can't do 2 out of 6 activities of daily living, your guaranteed income, it doubles.
Wow.
Recognizes that you might need more care as you age.
Yeah, that could be huge for some folks.
Absolutely.
So how do these riders actually work? The growth and the income.
So they have what's called a premium accumulation value, or PAV.
PAV.
This PAV grows with interest over time,
Okay.
but it can also get these annual step-ups.
Step-ups.
Yeah, based on how the annuity is performing, so that boosts your potential income even more down the line. And here's the big thing. Even if you draw down the cash value to 0 with withdrawals, that guaranteed income from the rider, it keeps going.
You're still covered. Okay. Now, what happens to the annuity, say, if the policyholder passes away?
The beneficiary, they get the greater of the annuity's total value, or that minimum guaranteed surrender value we talked about.
Right.
And there's an option for a spouse to just keep the contract as their own.
Okay, so some good continuation options there.
Yeah, good for estate planning.
And lastly, who is Ameritas Life Insurance Corp? Are they legit?
Oh yeah, they've been around since 1887. Strong reputation, financially solid, known for paying their policyholders what they're owed. That long history, that financial strength, super important when you're talking about this kind of long-term product.
Absolutely. So, big picture, based on all this info, this Apex Advantage annuity, it lets you aim for market-linked growth, but with some downside protection. Got those guaranteed features, some flexibility to access money if you need to, especially for health reasons, and then ways to turn it into a guaranteed income stream for retirement, even with things like that potential doubling feature.
That's a great summary. Hit all the key points.
So, anyone listening, think about your own retirement plan. How do these different features fit in? The growth, the protection, the guarantees, the income options. How does it all line up with your goals, your risk tolerance, all that good stuff? What questions does this raise for you? How could a product like this play a part in making your financial future more secure? Something to think about.
Yeah, lots to consider.
Thanks for breaking it all down.
You bet.
Until next time.